we will see a gold revaluation at some point in time as being part of the monetary reset. You know, gold revaluation is coming. What's best to do is to position yourself and add to your gold reserves. But what's very important to understand that we've seen the end of a 40-year trend of declining interest rates. And now interest rates are rising worldwide. This has led to inflation, or maybe interest rates are rising because of inflation. And once you have such a major trend change and a new trend starts, and I think inflation going up is a major new trend worldwide, maybe for decades to come. These trends always come in a few phases. So you can expect, just like in the 70s, if you study the inflation of the 1970s, this inflation came in three phases. There was a first phase, which started actually in the late 1960s, and then inflation came down, and then you get another rise, and then it comes down again, you get another rise. And I think we're in the same kind of process, the same kind of mechanism. So I expect inflation to come down towards maybe 7% or 5%. In Europe, in the Netherlands, we have inflation of 17%. But I don't buy the idea that inflation will go back to 2% and things will get normal again. But you can't fix inflation by printing money. You can't fix an energy or food problem by printing money. So central bankers are stuck. And if you look on a personal level, I live in the Netherlands. I also live in Switzerland. Well, also in Switzerland, the cost for electricity, they tripled. And this is the situation for most people living in Europe. And here in Dubai, of course, you use a bit less energy for heating, but you lose a lot of energy for cooling. And if you look what's happening worldwide, there's this major and alarming and almost scary trend of higher prices for food and energy, and this is killing especially the poor and the middle class. The move away from paper assets to hard assets, we've been discussing this for the last few years. Remember Bill Gross, the founder of PIMCO, he said in an interview last year that bonds are investment garbage now. So we've seen that Russia stopped buying treasuries, China stopped buying treasuries, Japan stopped buying treasuries. So there's a huge problem there. And if you don't want to buy any more bonds, if you don't want to invest in more paper assets, then it's very attractive to buy hard assets. And the hardest assets of all is, of course, physical gold. So if you're a central banker, you can print money and use that money not to buy US shares like the Swiss National Bank have been doing, but to buy physical gold. That looks like a very good strategy. And actually, all countries east of Germany have been growing their gold reserves in a massive way. And I think this has something to do with the possibility that we could see a gold revaluation, a dollar devaluation, as being part of this monetary reset thesis. And more signs are pointing towards that. So if you know gold revaluation is coming, what's best to do is to position yourself and add to your gold reserves. And this statement is quite unique because central bankers don't like to discuss this part. But we've seen a gold revaluation in the past. We've seen it in the 1930s, where the US had a gold revaluation and a dollar devaluation by 40% to fix the crisis. And actually, his answer of the Dutch National Bank president, his answer followed a question from a Dutch journalist on national TV, how the Dutch National Bank would cope with losses. Now the interest rates are rising and you'll have massive losses in the bonds portfolio, because this will be a problem for many central banks, and especially in Switzerland, where the National Bank bought all these assets and now is coping with huge losses in its portfolio. And we've seen, always ask yourself, what would central bankers prefer to do? Use Bitcoin to modernize the system, to have a monetary reset, or to use physical gold, which they own, and they're busy creating the central bank digital currencies, and they are willing to use the central bank digital currencies as their form of crypto. And there's a risk that they will try to sabotage some of the crypto developments, maybe close on and off ramps so people can't trade their Bitcoin into fiat. So I think there's a strong push for central bank digital currencies in almost all countries. You see that, and there you see the same common ground in China, in Europe, and in the US. If you look at the current situation, and what always struck me, that if you look at the countries who applied the sanctions against Russia, if you follow the Western press, it's like all countries are applying sanctions to Russia now. But if you study it in detail, it's just the West. It's just the West. It's a few dozen countries, and there are over 140 countries who don't join the sanctions. That this doesn't make them Putin supporters, but I think they want to stay neutral. They're fed up with the Western double standards, and now more and more of these countries from Latin America, Middle America, Africa, the Middle East, and Asia have chosen to join the BRICS alliance. We've seen Algeria joining, we've seen Argentina joining, and there are rumors that more and more countries want to join, and now we have the BRICS really becoming a very powerful alliance. And what I always say, it's the West against the rest of the world now, and that's very, very significant. Whether Saudi joins or not, finding a new anchor for world's financial system, so finding a successor for the US dollar, well, that could be a BRICS currency currently being developed, as Putin has said, but it also contains of debt restructurings, and we could see a gold revaluation as well and a dollar devaluation. So this plays out according to my thesis. Yeah, we've seen this huge run for the dollar, and if you look at the graph now, it seems to be topping out. And that was also the reason why gold and silver went up quite a bit in the last week. And I think gold and silver, the precious metals, really turned the corner here. And what's very interesting is silver is leading over gold. Silver bottomed out earlier than gold. It has a steeper uptrend. And I think that's a very strong situation. And we've seen a breakout to the upside from the downtrend since February, March this year. But we still have to clear the downtrend, which started in the summer of 2020. And that will be a large struggle for the precious metals. But what we see in the market is there's a lot of interest from retail investors to hedge themselves on the inflation problem. And I think there's a strong move away from the paper assets to the hard assets. And we've seen very strong inflows actually since the COVID crisis, but also this year, although returns are down this year.